What's up, ladies and gentlemen? I'm the Crypto Crow, and today I'm going to do a brief video explaining why you should never be trading on any of these leverage trading platforms with 100x leverage. And I'm going to be doing so. I'm going to be reading this article. I read this last night, and I'm like, wow, this is great to explain to people the details and the nuances of trading at leverage. And this is written by Pascal Thelman. It was just updated on February 22nd of 2020, and this was on CoinDiligent, if you're looking to find the article itself. But I'm just basically going to read through this because I can't explain it any better. After the wild success of the 100x leverage Bitcoin perpetual swap on BitMEX, other Bitcoin futures exchanges quickly matched the same offering. Today, most of the big crypto futures exchanges offer 100x leverage. Deribit, I've never heard of them, ByBit, and FTX, just to name a few. However, is this truly in the best interest of exchanges users? For most new traders, the idea of 100x leverage sounds extremely alluring. After all, who wouldn't want to trade with $100,000 while only having a $100,000 account? Which is where they're getting you. It's all smoke and mirrors. Little do they know that 100x leverage destroys any trading edge that they may actually have. The goal of this article is to outline why in simple terms. Key points. When using more than 25x leverage, the exchange's maintenance margin is destroying your trading edge. Fees are charged on the entire leveraged position and not just your margin. Hence, fees are extremely destructive to your margin when using high leverage. Big traders are incentivized to liquidate over-leveraged positions and indeed do so regularly. I'd like to give credit to Bamboo Club for most of the ideas discussed throughout this article. His excellent Medium articles about Bitcoin derivatives are a must-read for every cryptocurrency trader, which I'm reading, even though I'm not doing any of this. It just kind of helps to understand what's going on in the market. Finally, it's important to note that this article is in no way a criticism of BitMEX. In fact, I do most of my trading there, but it's important that traders know what they're getting into when using the exchange. Maintenance margin destroys your edge. BitMEX works unlike traditional futures exchanges like the CME, where losses are technically unlimited. At BitMEX, your maximal loss is the margin that you are using in a particular position. Hence, BitMEX needed a mechanism to ensure that losses never exceed a trader's margin. The exchange's solution to this problem is rather elegant. BitMEX forcefully liquidates a trader's position before the margin is worth zero, also called the bankruptcy price. If a trader is long, BitMEX sets a liquidation price slightly above the bankruptcy price. If a trader is short, BitMEX sets a liquidation price slightly below the bankruptcy price. If the market moves against the trader's position and reaches the liquidation price, the position of the trader is automatically liquidated at market. Crazy. This difference between the liquidation price and the bankruptcy price is referred to as the margin maintenance requirement. And then there's a graph here showing what that is. This is great for BitMEX because the MMR serves as a cushion protecting the exchange from liabilities, but it's highly destructive for traders. And most people underestimate how destructive it really is. Theoretically, if a trader is 100x long, his margin is worth zero after a 1% drop. A 1% drop and you're done. You're out. You've lost it. You've lost it all. It's crazy. However, BitMEX already liquidates the position after a 0.44% adverse move to satisfy its maintenance margin requirements. So as you hopefully realize by now, the maintenance margin requirement when using more than 25x leverage is absurdly high. This significantly erodes a trader's edge since it liquidates a position before it would be fair to do so. To avoid falling victim to high maintenance margin requirements, do not trade with extremely high leverage. This effect is barely noticeable when using less than 10x leverage. fees eat away your margin. This gets crazy. Fees on BitMEX are comparatively much higher than on spot exchanges, since the fee applies to the entire leveraged position, not just the margin used, which is how you get liquidated so quickly. So if you have $1,000 in your BitMEX account, your margin, and you use it to open a $100,000 position by using 100x leverage, you're paying the 0.075% fee on the entire $100,000 position, not just the $1,000 you started with. This means that you're effectively paying a 7.5% taker fee on your margin. I hope you guys learn from this. I really do. I'm hoping this doesn't go. I hope this doesn't go ignored. Now, if you use a taker order to get into the position and a taker order to get out of the position, you will have paid a 15% fee on your margin of $1,000, which is $150. Crazy, right? Let's now plot this on a chart to make it more visual. This chart below displays the percent of your margin that gets eaten away when using market orders to get in and out of a position based on how much leverage you're using. We can clearly see that the fees paid when using very high leverage over 25x is extremely destructive to your margin. Crazy, crazy, crazy. And there's still some of you guys that are out there on a pipe dream trading with this stuff, getting wrecked. And this is another part of the problem that I see with leverage traders. Is, they go and they join somebody's VIP trading group to try and get trade signals. They have no idea what they're doing. Then they go to one of these exchanges because they click the referral link. They're trying to get their free $60 or whatever. And these guys are basically telling them, oh, we're going to the moon and this is going to happen and that's going to happen. They go in, they place their bet, and they lose it all. And then they're silenced and I know that some of these YouTubers do it. I do it myself sometimes. If I get trolls or spam or just ridiculousness on my chat or under the comments under my videos, I'll just hide them from channels so that nobody ever sees them again. It's like they're not here to support anything going on. They're just trolls. However, guys that are pushing people to like ByBit and some of these other programs, and then they get liquidated, they get wrecked, then they come back to that channel and start complaining like, I did this, I did that, and then they're just silenced. And so it's all positivity all the time while they're pumping this stuff that they're making money hand over fist on. At the time of the writing, the 30-day rolling average Bitcoin volatility is 2.39%. And basically what this is saying is you're liquidated after less than 1%. But the regular volatility of Bitcoin overall is 2.39% on average. So these exchanges have structured everything to just make sure you're getting wrecked. I mean, plain and simple. This is the standard deviation of daily returns in the past 30 days. For reference, here's the adverse price move that would liquidate a long. Move to liquidation, 0.44%, 1.42%, 8.63%. So if a trader is using more than 50x leverage and doesn't perfectly nail the trade, odds are he'll get liquidated after just a day. But that's not all. There are days when even if the trader is right and the price ends up trending in the predicted direction, the position gets liquidated first as big traders run the market sharply up and down to shake out over leveraged traders. It's a hustle. To me, it's one big con game. This price action has been informally termed as a Darth Maul candle in reference to the Star Wars character known for using a double lightsaber. In January 2020 alone, there were 5 occasions where in a single day, Bitcoin moved 3% plus from high to low, only for the price to close near the daily open. Over-leveraged traders get slaughtered in price action like that. To conclude, don't trade with 100x leverage and avoid using more than 25x. I would recommend not, whatever. I'm not recommending anything. I'm not giving financial advice. I'm just an idiot on the internet. If you do, know that the odds are stacked against you. I want to say thank you, Pascal Thellman, for writing this article so that I could read it to as many people as possible, hopefully, and save some of you guys from getting wrecked. the overall moral of this whole thing is, look, I would pretty much be willing to go up against somebody once. As soon as Crow Trader gets out of beta and I start actively using this every day and showing everybody my strategies and everything going on with this again, I would be willing to hazard a bet. I would like to even do some not necessarily competition, but what will outperform leverage traders? Automatically trading on a bot with some prime strategies, or trying to leverage trade on BitMEX or ByBit or any of these other groups. And I would like to see who comes out ahead. The reality is that when you leverage your trades, you're paying so much to the exchanges, and these exchanges do not care if you go up or down. It's like, to me, it's like a casino where everything is rigged in the house's favor. So not only do you really need to know your stuff, I believe that you almost have to get lucky in some cases as well, because with the volatility of Bitcoin the way it is, or any cryptocurrency for that matter, trying to trade at 100x leverage is just doom. I mean, it's just flat out doom. And they're more than happy to provide that opportunity for you, but chances are high you're going to be liquidated. And if you're not liquidated by the normal market movement and the volatility, you're going to get liquidated by the whales that are moving the market in one direction or the other to beat their neighbor. So my suggestion is be very, very careful. Never invest anything in crypto that you cannot afford to lose, because likely when you're trying to cut corners like leverage trading, you're probably going to lose. And I don't care what anybody says. There are guys on YouTube trying to justify the fact that they're promoting leverage platforms. There are guys out there trying to sell VIP, technical analysis trading signals. They don't know what the hell is going to happen in the market either. Technical analysis only takes you so far. And for people that are basically buying into this stuff on the hope that the price is going to shoot up, or, oh, wow, we're so oversold. We're only going up from here. RSI is this, and based off of support and this and that, my target is, $500 higher. And then you go and you trade that. All the price has to do is go half a point lower, or against whatever your position is, whether you're long or short, and you're done. That's all there is to it. So to me, leverage trading is a fool's game. It's definitely not a game that's won by many. And that's all I wanted to say on this Monday as you're moving into, a part of me doing this I've done other videos on leverage trading in the past. Anytime I find something good, I like to try and share that with everybody just to keep everybody informed. Especially now in the bear market, there's going to be a lot more FOMO. There's going to be a lot more people watching these traders, price goes up, you're going to see a lot of this kind of stuff. And I feel like it's only going to get worse. So, I encourage you to use your better judgment. Okay. And until next time, crow your coins. I'll see you again soon. Thanks.